What's up guys, and welcome to episode 15 in my monthly series where I present to you my top 3 dividend stock picks of the month. If you're new to the channel, welcome. This channel focuses on a long-term buy and hold income-focused investing strategy. The primary objective of this strategy is to generate safe, consistent, and high passive income forever. So we achieve that goal by investing in funds that primarily hold blue chip stocks that use income enhancing strategies like covered calls in order to achieve that high income and yield, but safely. So this strategy has enabled my wife and I to become financially independent in our mid-30s. So if we can do it, so can you. I'm Canadian, so most of the stock picks that I talk about on the channel and in this video are Canadian listed or on the TSX. But since more and more of my viewers are from the US and even outside of North America, I will make sure to include going forward at least one stock pick that is listed or based on the US stock market. This will be the first pick out of the 3. So don't forget that as Canadians, you can avoid the 15% withholding tax on US dividends or distributions by keeping those funds in your RRSP account. So if you like my US listed stock pick, the best place to put it is in your RRSP. So the bulls are definitely out and they continue their magnificent run lately. I mean, stock markets are still at all-time highs. Optimism is in the air, guys, about the reopening of the economy in the US and even Canada now, as we start to see the light at the end of the tunnel. So although this is great news, I'm kind of sad about it, if I'm to be completely honest with you. Why? Well, I honestly missed the March and April crash of 2020 or the volatility back in 2020 because of all the amazing deals that there were on stocks. So those days are already over, but that's not really a big surprise for me because I've been investing on my own for over 10 years now, and I know that stock market crashes or corrections can be very sudden and extreme, but they're also very short. So I honestly can't wait for the next correction or crash so I could find some more great deals. So this is the attitude you should have, by the way, as a passive income investor who just buys and holds. It's not because I'm crazy, it's because I'm a buy and hold income investor. I don't make my money with stock prices going higher. I make all my money doing absolutely nothing. I sit on the sidelines, collect the monthly income as I go, and enjoy the show, no matter what the stock market is doing. So all the worry, all the anxiety falls really on growth investors, not us, because they make their money only one way or primarily in one way, with share price appreciation. So when a crash hits, they basically poop their pants. Not caring about what the stock market does is the privilege you get as a passive income investor. So as usual, the 4 criterias for my stock picks: I own the stock myself or am planning to buy it shortly because I talk the talk and walk the walk. Number 2, the stock must provide a steady source of passive income, so a dividend or a distribution. Number 3, the dividend or distribution must be relatively safe and sustainable. Last but not least, number 4, the stock must have good value. You should always try to find what's undervalued, even though it's hard in a strong bull market, but something always is. It's only logic if you invest regularly like myself. So without further ado, here are my stock picks for the month of June 2021. Alright guys, pick number 1 is the CLO Global Opportunities Fund. So the stock symbol is GLO. This is a US listed stock, guys. It's on the New York Stock Exchange. So GLO is a closed-end fund listed on the US stock market that invests in global equities or stocks, but it's primarily US blue chip stocks. So the annual dividend is $1, just a little over $1.30 per share. It is reset every year. I'll talk about it on the next slide. And the dividend payout is monthly. So the 1-year high of this fund is $13.11, which would give you a dividend yield of 9.95. But right now, as of May 28th, the stock price is $12.14, which is giving you a really nice dividend yield of just under 11% at $10.74, which is excellent. So my key points and reasoning for this one is that the latest figures on the fund's website show that this fund, or CLO, is trading at a 7.61% discount to NAV. And it's very hard, guys, to find funds that are trading at discounts in a strong bull market. So in case you didn't know, every fund, ETF, split fund, has a NAV price and the stock price, right? So the NAV price is actually what it's worth per share, and the stock price is what it's trading at right now on the stock market. So usually in a bull market, funds trade at premium, which means the stock price is higher than the NAV price, but in this case it's the opposite. The NAV price is higher than the stock price, which is very rare. I also really like the distribution policy of this fund. It's reset annually to 10% of NAV. So it's pretty high, but it's not overly aggressive like CLM, which is 21% of NAV. So 10% of NAV, very, very good and sustainable. And if you look at the stock chart in the last a couple of years, you'll see that the stock price is very, very stable. And that's my second last point there. But what I like about this fund, it's very diverse. It mostly has US blue chip stocks, but it also has some emerging markets as well. You could see here from the pictures, from the screenshots, this is taken directly from the fund's fact sheet. So as you could see, US and US multinationals make up the bulk of this fund, but you also have some emerging markets like China, Taiwan, South Korea, Hong Kong, Canada is there. So Switzerland, Germany. So some emerging markets and other first world economies are there. And you have the asset allocation at the bottom as well. So 57% US stocks, 34% foreign stocks. So very, very heavy on the stocks, very little fixed income. There's only about 8.94% of fixed income, which is cool. I guess you have a little bit of stability with the fixed income. So I really like this fund. Like I said, it's trading at a discount, which is very, very rare. The stock price is very consistent in the last 10 years. And CLO is actually the biggest fund from the three. So CLO, or this fund manager, has three closed-end funds: GLV, GLQ, and GLO. And GLO is actually the highest yielding right now and also the biggest. So that's why I really like this pick for this month. Pick number 2 is the CI Energy Giants Covered Call ETF. So the stock symbol is NXF. This is Canadian, guys. It's a Canadian listed stock, and it's from managed by CI Global Asset Management, one of my favorite asset managers. The annual dividend, 45 cents a share. That's the average of the last 4 because they are quarterly dividends. And this ETF holds 15 of the biggest global oil and gas producers. It also writes covered call options on 25% of the portfolio for enhanced income. The 1-year high is 481, which was giving you 9.36% annual yield, but the current price is 463, so you'll get about 9.72%. So a really, really nice yield on these big blue chip oil producers. My key points and reasoning for this one is that although oil prices have recovered since Q1 in 2020, I think there's more room for upside as travel demand will start increasing more and more with the easing of COVID-19 restrictions. And we all know planes need fuel, right? There's no electric planes yet, so they need oil and gas. So before COVID-19, this ETF was consistently trading between $6 and $7. Right now it's at $4. So I think it still has a lot more room to recover to those levels, offering some good share price upside as well as high income while we wait. This fund only has the biggest in the world when it comes to oil and gas producers. No junior oil and gas producers, guys. Really only the best of the best. You see the full list of 15 here. So you have Canadian Natural Resources and Suncor. Those are the two biggest ones in Canada. You have EOG, that's US. Petróleo Brasileiro, Brazil. Equinor, that's in Norway. ConocoPhillips, US. BP, that's the big one in the UK. You remember the BP oil spill years ago. Enispa, that's in Italy. ExxonMobil, Chevron in the US. Total SE is the big one in France. Pioneer is also US. You have Royal Dutch Shell basically from the Netherlands, Occidental US, and Ecopetrol from Colombia. Yes, I know them all by heart. So the covered call, because of the covered calls, you really get a nice income here, but it's only on 25% of the portfolio. So it really has some room to grow there. And this is what gives you that nice 10% yield, which is just great for big blue chip oil and gas producers. All right, last pick, guys. Pick number 3 is the real estate and e-commerce split fund from Middlefield. Stock symbol is RS. Once again, guys, a Canadian listed stock. So the dividend payout is monthly. It's $1.20 per share. That's the annual dividend. And this split fund holds 17 of the top REITs in North America, really focused on industrial or e-commerce properties, which I'll show you in the next slide. So the 1-year high for this fund, even though it's relatively new, was $16.98, which is giving you a yield of 7.07, but right now it's about 15, 18. So you get just under 8% yield, which I think is pretty good for really safe and big REITs. So my points and reasoning for this one is that this fund, also like the first fund, is trading at a discount. It's a small discount, but it's still a discount of 5.36% to its NAV. So the NAV is actually higher than the stock price. The NAV is about $16 and the stock price, like we saw, is about $15.18. In my opinion, guys, this is the best way to get quality real estate exposure with one fund. It has a high 7.9% yield, which is higher than all the single REITs inside this fund. And this fund does use leverage to enhance the income, but no covered calls as of yet, because they want to really capitalize on the real estate recovery. But the fund manager, and I did email them about this, they confirmed that covered calls can and probably will be added later on at the fund manager's discretion. Also, the fund manager, Middlefield, is a real estate expert. I trust them 100% when it comes to real estate. They also manage another one of my favorite ETFs. This is a split fund, but they also manage IDR, which is an ETF that holds a lot of the same stocks, but it doesn't use leverage. That's the difference. So it's a pure organic growth ETF. And on that ETF, you have a yield of about 6.3%. So this one a little bit higher because of that leverage. And you could see all the breakdown here of the 17 funds or 17 REITs rather that this fund holds. You could also see the breakdown. So it's separated by industrial and data centers. That's the industrial portion, 56%, so a little over half, and the rest is long-term value. So what's a long-term value? Well, let's go through the list. Smart Centers, RioCan, CT Real Estate Investment Trust. That CT stands for Canadian Tire. So those are they own a lot of the Canadian Tire retail space. There's Crombie, Canadian Apartment REIT. That's the biggest REIT in Canada, by the way. Killam Apartment REIT is there. Chartwell Retirement Residences, and you also have Allied Property. So those ones that I just listed are under the long-term value. So they have a bit of everything. There's retail, there's residential, there's office, there's a little bit of everything. And the rest, the ones that I didn't mention, like Granite and WPT, Dream, Equinix, etc., those are the industrial ones. So a really good mix of value and industrial. Industrial is very hot because of the growth of e-commerce, right? They need industrial real estate space. So this is a really amazing fund. It's my new favorite way to invest in a real estate. Very smart fund. So I hope you enjoyed the video, guys. As always, please support this channel. Please support me by hitting that like button. It's free for you. It helps the channel out, so it's a win-win. Of course, don't forget to visit our website, passiveincomeinvesting.ca. That's where you can purchase my digital product, the Ultimate Dividend Passive Income Investing Package, which is basically all my years of research put into one file. It's all the stocks you ever need to build your own portfolio, no matter what your investing goals are. I also offer a one-on-one consultation service, so you could chat with me if ever you want me to help you to build a portfolio, modify your portfolio, ask me a million questions, whatever it is. I do offer a one-on-one video consultation session on my website, but right now I'm completely booked until end of July. So the August appointments or the August calendar will open up shortly. Will open up in a month or two, but I'll let you guys know when that opens up. And finally, of course, make sure you're subscribed, guys. You don't miss out on my future content on passive income investing, as well as my community posts. And next week, I will be doing my regular monthly survey where you, the viewer, can choose what topic or you want to see next. So you got to be subscribed to get that survey or participate in that survey. So make sure you're subscribed. We're also on Instagram. We're also on Facebook. Our Facebook group keeps growing. We're at 1,100 members now and growing. So we got a nice little community there, so make sure you follow us. All the links, all the details are in the video description below, so make sure to check it out. The mission of this channel remains the same, guys. It's to help everyday working people to invest on their own in order to build their own stream of passive income so you could enhance your quality of life. So with that, take care, guys, stay safe, and see you next time.